So, what are my predictions for this year? Well, I'd have to be sick, Ferris Bueller, to try to predict 2026, but here's my best take on it. U.S. economic growth will remain positive through Q4 and Q1 26 due to capital investments in AI and lowering interest rates for an increase in housing activity. I think housing activity is really going to pick up. Prices are going to be lower, but housing activity is going to pick up. However, weakening unemployment, increased bankruptcies in the consumer and business sector, and a correction in the equity markets will slow economic growth, and the U.S. will dip into contraction at some point later in the year. Employment will continue to weaken as companies introduce AI and robotics. Further, government employment will contract as employment in consumer-focused industries cut workers. The employment rates will reach 5%. Again, if we weren't moving out so many illegals and so many baby boomers, the unemployment rate, I think, would be more up at 5.5 or 6%. But we're, again, shrinking our workforce. Interest rates. The Fed will cut interest rates in 25 basis point increments, occasionally pausing because of the concern about inflationary pressures, but the weakening labor market will take precedent, and the Fed, by the end of the year, will have cut 100 to 125 basis points in total. It's good for CRE investors, good for a lot of people. Fed's balance sheet quantitative tightening has already ended. The Fed will keep its balance sheet flat through most of next year, but be forced by year end to start quantitative easing again. Asset value predictions.